I've been involved in crypto for around 3 years now, and I've seen both a bull market and a bear market. And I've also seen my portfolio go from 6 figures all the way down to around 25K. Because when I first got in, I really didn't know what I was doing. I had people around me at the time that thought they knew what they were doing, but really they didn't. And so I saw huge gains quite quickly, but I also saw huge losses within a very short period of time. And so it's really important that you have a strategy to entry and know the bigger picture before you even think about investing in crypto, because you can be sat with huge losses for a very long time before the market picks back up again. And if you don't know who I am, I'm Michael J, and I quit my job almost 6 years ago now, and ever since I've been building businesses. And it is my absolute passion and calling in life to teach as many people how to do the same thing. And in this video, I'm going to walk you through my strategy and the steps to allow you to invest in crypto in 2024, especially if you're a beginner. Okay, so jumping straight into it. So the first thing that you absolutely need to be aware of and be comfortable with is that crypto is probably one of, if not the most riskiest asset in the entire world. And you need to understand and be comfortable with, once again, that whatever money you invest in crypto, you could potentially lose. And this is super important because I've seen people come in with, let's say, 30, 40 grand to the name, and that is literally their entire net worth, and they've put all of it in, and I've seen people lose most of it, if not all of it. And so if you can't afford to lose that money, you really should not be getting involved, because there's been some huge multi-billion pound projects that have failed for one reason or another, but some of them have just been scams, and people have literally lost hundreds of millions, if not billions. Some of those notable projects are FTX, which was a huge exchange, and Luna, which also had one of the biggest stable coins, and they went down within the matter of weeks, and they lost people absolutely billions, and that can happen to you as well. But with that being said, there are some safer plays and some riskier plays. One of the most obvious safe plays out there is Bitcoin. Bitcoin has been around for 14, 15 years, and there is hundreds of billions invested in Bitcoin. And over the past 6 to 12 months, more and more institutions have been getting involved. And of course, recently we've had the ETF approval, which has opened it up for these huge institutions to be able to get Bitcoin for their clients. Then you've got the more risky side of things, where you've got some gaming tokens or gaming projects that have got hundreds of millions as opposed to billions. And these projects can literally fail just like any other business. And so it's no different for crypto. And of course, I mentioned before, there are scams out there that you've got to be aware of. Okay, so now we've covered the risk aspect and you're happy to take that risk. The next piece of the puzzle is to start doing some research and become proficient in the world of investing in general. And so the next piece of the puzzle is becoming proficient in the bigger picture, i.e. to know the position of the world's economies. And by world economies, I mean, how strong do these economies look, the main economies across the world, look from a growth point of view. And the reason why this is super important is because all of the investment markets out there follow the world's economies. So as an example, if the US and the UK are performing badly and their economy is going down, they essentially have to raise interest rates. And when that happens, spending starts to slow down because there's not enough money in circulation. So what do you think is going to happen with risk on assets like crypto? Are people really going to have extra funds to be investing in them? No. Normal people like me and you, when the economies are like that, we don't hardly have enough money to buy enough shopping or petrol or anything like that, right? We can't take loans out, and so our spending is really cut down. So no one is investing in any kind of investment pots, whether that's risky assets like crypto or more safer aspects like the S&P 500. And over the past few years, crypto has been in a pretty bad bear market. And what kicked that off? That was COVID. Because the government started piling loads of money into the economies, people had loads of money, they were spending, everyone was an absolute genius. But then when all that ran out and the government decided, oh, wait a minute here, we've put too much money in there, the debt is too much, they needed to start reducing that. And what they did is they started raising interest rates, and they were doing that for around 2 years. And so how has crypto been over the past few years? It has been very poor, and it's been in a bear market. Last year, the markets did start to climb, and towards the end of last year, we did enter the bull market, but only because the economies, the governments in these different countries started turning around and they stopped raising interest rates. And by the end of last year, more money started coming into circulation. And so what's been happening to crypto markets, the market has started to go up quite drastically. And that is going to happen more and more over the next few years if the governments and the economies start putting more money back into the economy and stop tightening things. And all investment markets follow patterns, and what history tells us is whenever the economies are bad and they're tightening things and they're raising interest rates, markets are usually down. And the opposite side of it is when economies are doing well and they're not tightening things and they're easing up, people have got more money, and so they're putting it into things like crypto. And so what does crypto do? It does really well. Okay, so now you can see how vital it is that we know the bigger picture. But what the next really important piece of the puzzle is to know how the individual projects or crypto coins are performing. And what we're going to do here is we need to do some heavy research into each of these rather than just looking at the price and what it's done over the past few months. It's much bigger than that. And why this is so important is because you need to be informed, right? I've seen far too many people lose a lot of money because an influencer told them to. And that influencer has probably got a lot of money into that project. And what do you think they're trying to do? They're trying to pump the price by telling all of their customers, clients, followers, whatever you want to call them, to invest in it. And when they do and the price shoots up, what do you think these influencers do? They take their money out. And to be honest, a lot of these influencers get paid to shill coins. They get paid to pump them. So they might not even have any money in there. However, they are getting paid potentially hundreds of thousands to say, invest in X coin, put all your money in Y coin, because they're being paid hundreds of thousands by these projects to do that. I've also seen people invest in a coin because they've taken a look at the last few months of a particular project and they say the price looks good based on that little timeline, which again is absolutely insane. You need to know the bigger picture of the economies, of course, as I mentioned before, but of these individual projects, what they do, what they're looking to do, their price history over years and not just a few months, because then you know roundabout what is going to happen next with that project and the potential price increase. So what do we do to jump in if you're an absolute beginner? So the first thing that I'm going to recommend is you to download something called CoinGecko. That is essentially a website that will tell you in a list of all the crypto coins that there are out there. It will give you the price, what it is now. It will give you a price history, and you can even dig into each project and it will tell you something about that project, i.e. what it does, what it's intending to do, the tokenomics, which is extremely important that you know. It will also give you links to their websites if they've got a website, which we need to absolutely look into, and we need to take a look at the white paper. The white paper is basically the document that describes everything that that project is intending to do. And it will include things like the tokenomics, as I mentioned before, which is basically how their tokens that they send out are divided up. And just to go into this a little bit because it's quite important. So tokenomics are essentially the pot of tokens that get given out by a particular project. And whoever owns those tokens has a stake in that particular project. So let's say, for instance, a project has 10 million coins. 20% of those might be going to founders. Another 20% of those might be going to the team. Another 10% of those might be going to early investors, and the rest might just be going out to the public. But why it's important is just imagine if you've not looked at it and the tokenomics are 50% are going to the founders, 30% are going to the team, and only 20% are going out there to the public. Well, just what happens if that 50% from the owners, they just want to dump the price. They want to sell it all and get some money back in the back pocket. What's going to happen to the price? You've lost all your money. If you've bought at the top, the price is going to tank and you've lost potentially 90% of your net worth. So you can see now how important it is that we dig into these projects. We need to know who they are. We need to know what they do. We need to know the history of the price. So we've got a good, well-informed decision on whether we want to invest or not, because we'll have a good idea of where we think the price is going to go next, and of course where the project's going to go next. Okay, so now we are proper investors, right? So we've not just jumped in because an influencer's told us to, or a friend. We've put all our money in and we're going to potentially lose it all. No, we've done our research. We know the bigger picture in terms of the economies. We know what we're doing in terms of the individual projects. We know who they are, what they do, and where the price has been. And so the next part of the puzzle is to know when and how to invest. Okay, so just circling back round to the world economies. So if we know now that when the economies are down, the crypto is going to be down, and when economies are up, crypto is going to be up. When do you think we need to be investing? Do we need to invest when the market's right at the top and the economies are doing really well? Or do we need to invest when the markets are really down? Because what goes up must come down, right? And when we're at the top, it's probably going to be on its way down. But when we're right at the bottom and the economies are bad and everyone's thinking that everything's just going to die, that is the time where we need to be getting in, because what's at the bottom is probably gonna start going up. And this is the most difficult thing about investing, because the time where you need to invest, where all the smart money in the world starts investing, is when the rest of the world thinks it's a stupid thing to do, because everyone's panicking, the economies are down, people think that the world is ending. That is the perfect time to start investing, because there's only up to go. And what history has told us, as I mentioned before, when economies are down, that has always been the best time to invest. You're gonna get the biggest bang for your buck. Okay, so now we know when the economies are bad, that's when we need to get in. But in terms of the individual coins and the prices of all of these crypto projects that you want to invest in, when do you think the best time to get involved is? Is it at the bottom when the economies are bad? Or again, is it when it's at the top when the economies are doing really well? Well, most people think that when the prices are doing really well and everyone's absolutely excited and euphoric because these prices are at the top, and people think it's going to go up forever. So people, normal people or dumb money, get involved in when it's at the top. But what happens? It just tanks. Smart money gets in when the prices are very, very low. And just to give you an example around this, so in the height of the bull run in 2021, Solana was around $280 and it got a lot of negative news and FUD about it. And over 2021 to 2023, the price absolutely tanked, and Solana at one point was at $10 per coin. And everyone thought Solana was going to die. but that was the time that I invested in. And right now, as of January 2024, the price is at around $100. So from when I got in, the price has done a 10x. So if you had $10,000 in Solana when everyone was panicking and thinking it was gonna die, now you'll be sat on a cool £100,000. And as I mentioned before, this will feel very uncomfortable. It did for me. I put quite a lot of money in Solana, and everyone's saying you are stupid if you think Solana is going to survive. Get all your money out now. It was literally insane, and I just got taught that that is the best time to get in, and so I got in because I actually believed in the project. I believed in Solana. I did a lot of research into that particular coin. I looked at the white paper, and I just think they're a very solid project. And so I decided to get in, and it is absolutely paying me dividends right now. So just to hammer the nail in a little bit more, when the economies are down, that's when you invest. When the prices of all your individual projects are really, really down and everyone thinks they're gonna die, that is when you invest. Okay, so now you know the when. What is the how? How do we get involved? Especially if you're a beginner, the crypto world can seem very overwhelming and a little bit scary because you might potentially be investing tens of thousands. So the first place that you need to be going into is something called an exchange. And there are decentralized exchanges and centralized exchanges. And I'm not going to go too much into this video about that, but I do want to give you a little bit of the differences just so you know what you're talking about. But before I do that, let me just give you a little explanation of what an exchange is. An exchange is essentially a website that you can buy crypto coins in. You can invest in crypto, you can buy crypto, and you can sell your crypto. So it's basically a website for buyers and sellers, and there's an intermediary, which is the exchange, with centralized exchanges, of course, and they essentially hold money for you to be able to buy and sell crypto on that website. And just like CoinGecko that I mentioned before, where you're going to be doing all your research, it gives you a list of all of the crypto projects and coins that you can buy. Now, not all centralized and decentralized exchanges have the same coins because not all of them want to take on all of the coins, to be honest. And so you might have to go to a number of different exchanges to buy the coins that you want, but that's fine. I would actually recommend that you have multiple exchanges to put your money on, invest just in case one of these exchanges goes down and totally fails. You don't want to lose all your money. So you don't want to put all your eggs in one basket ever in the world of crypto. And just like CoinGecko, it will give you a price of what it's at right now, and it will tell you the history of that price as well. And as I mentioned before, you can just buy and sell at any time you like. And of course, you can store it on there. So now you know what an exchange is. Now we need to dig into what a decentralized and centralized exchange is. So the whole purpose of a lot of crypto projects is to take the power away from these big corporations and the governments and put more power into the people. And so decentralized does that because it doesn't have one central entity that's controlling all of the money that's in there. Decentralized exchanges are a peer-to-peer thing where people sell and buy on there. There's no centralized exchange, i.e. Binance, that hold all the money and essentially that have all the power. And in all honesty, with decentralized exchanges, it's a little bit riskier, but you have control of your money. Governments cannot take that money away from you, but governments with centralized exchanges, they do regulate them, and so you have to do something what's called a KYC, which is know your customer. You have to upload things like your passport or just some form of ID, which means you're essentially locked in at that point to that exchange, and the government know everything about you and what you do on that centralized exchange. Okay, so now you know what exchanges are out there. I'm just going to give you a few to dig into. Well, I'm going to tell you the ones that I quite like and that I've put my money in. I like to have my money on 3 exchanges, okay, and I split my 100% portfolio into these 3 exchanges. So I've got Binance, I've got KuCoin, and I've got an exchange called Nexo as well. And some other notable exchanges out there are Coinbase and Kraken, but make sure you do your research, do a bit of Googling, do a bit of searching on CoinGecko, start following people on Twitter that are involved in crypto and make your decision from there. Okay, so now we know what exchanges are, and that's the best way to get in and start investing in crypto. But to go to the next level and have extra security and control, in all honesty, of your own money when it comes to crypto are wallets. And this is what people call cold storage. And the reason why they call it that is because it's essentially locked away and only you can access that, and people don't really know what's in that wallet because they can't see it. None of these exchanges know, none of these exchanges can hold the money from you, they can't tell you what to do with it, they can't freeze it. Once it's in your cold wallet, it is yours. And one thing I've got to mention here though is, it is very secure. However, because you're the only person who knows the password, and you get something called a seed sequence, which is just a sequence of words, and you get maybe like 15 or 20 of these words. If you forget any of those, you have lost your money forever. So it's absolutely vital that you know this and you keep the password and the seed words in a very safe place. I know people have got millions on them things and they are very paranoid about losing this seed word. So they've give it to loved ones, they've put it on computers or pieces of paper, and they've copied it literally 3 or 4 times just in case. Okay, so that is pretty much how you can get into crypto as a beginner. Now, you can start trading, and there are trading platforms out there that you can get involved in, but I don't want to go into it in this video because for me, that's not really for beginners. I will probably talk about trading in a different video. There's different forms of trading and it can be very lucrative. You can even trade with leverage, i.e. other people's money, and borrow, but let's not go into that right now. I don't want to overwhelm you. We've been through exchanges and wallets, and we've been through what you need to do to start investing in crypto. And you can see that it's actually not that hard. And once you've done it, you'll realize actually, this is quite easy, and it feels a lot more safe, to be honest, because I know getting into crypto, you hear all these horror stories and it can feel very overwhelming and a little scary. But hopefully this video has provided you with all the information you need to get going. And if you did take value from this video, please like it, please subscribe, and until next time,